Hi, this is Daniel Rowe with TradeThePlan.com. I wanted to record this and kind of document this long trade that I've taken in crude oil yesterday. What is today, the 24th? Yesterday would have been June 23rd, and I entered a long trade in crude back here, right here. Let me turn on. Yeah, right there. So this was the initial risk on the trade. And I'm going for the top of this channel, which is about 100 ticks away or so, but the same channel on the tick chart is much closer. Let me go through these charts. I was trying to go ahead and start recording before it went up and tagged my first target, but it looks like I'm fairly safe. Let me just do this and go through the risk reward on this. So it's around 7.5 R multiple, which is, obviously pretty exceptional. But let me go over some of the reasons why I got into this trade and held it overnight and why I'm going to exit around the top of this channel. So this was the main reason that I bought, because it had turned off up and off from this upsloping trend line from low to low. And then I would be expecting to see it come on down to about 85 or so. And the reason for that is this larger channel, which would be the high that we had last year, to not quite the highest high in March, but that lower high, and then dragging this channel back to the lowest low between the two highs, which is giving you the basic slope for these swings in here where it finished the up move. And I'm thinking that this is one big A down, B up, or maybe it's WX, and then we're looking for a Y wave down. So I'm thinking that this is A or W, B, X, or X, and then C or Y. So I'm still looking for more of a push down, further down, lower prices, but I am expecting a bit of a retracement first, which now we've had, and now I'm looking for my exit, and we've already gone through the first big down sloping channel, and so the next one is quite a bit further up, but not quite above that preceding swing high. So that's right here, and I would be looking to get an exit probably right in here, which right now that price is 111.57, and a few more bars though, it's going to be closer to about 110, 110.5. So now moving to the faster charts. This is the hourly. It's a very large up bar on the hourly. I would expect to get up a little bit higher at about that 50% warning line or so. Yeah, probably right in line with the median line where the two intersect. A little bit above 109. Now, the next area is really this midline from low to low, which is just above it. So that's really what I'm looking for. That midline, that's about where my first target is. But you can see all of these areas come together just a bit higher, above 109.50. So if it goes right up into that spot, that's a full exit, complete exit. I'm going to draw the profile on here just to see. I can already tell by looking at it, the majority of the volume is in the very top quarter, but the highest volume up in this top part, actually it is in the top part, is an area that I would want to be mindful of, which would be right there, just above 110. This is the RTH chart, RTH4. This is another area that it turned up from, that lower median line perfectly. And then this is a broken parallel of that channel. So if I drew that again from high to high, you can see that's the broken channel that we're about to be touching about as it hits my first target, which would be just above 109. And then the top of that channel. Right now it's about 111, but by the time it makes it there, it'll be much lower. But you can see that median line is coming in much closer, about where my target is. So those are all the reasons for my target being where it was. I'll go over for some of the reasons for the entry here in a moment, but it's pretty clear there. That first retracement after the massive reversal that we had up yesterday. It gapped way down, or sorry, 2 days ago, gapped way down and then went straight up. And then all day yesterday, it was working its way down into that low just before the, well, it's right at midday actually. And then today we've gapped up, filled the gap partially, and taken off straight up to the upside. But you can see the bars on this 15-minute chart are narrowing. You have narrowing range. So it's definitely slowed down. I just want to see one more push, at which point I'll take the first contract off. And depending upon what it looks like, I may move that second target just a bit higher up. So the channel, upsloping channel on this chart, it's just a little bit closer because we don't have the lowest low right there. What a beautiful low though. Big 2-bar pattern, big selling climax followed by narrow range, extreme density, churn bar, which is what you would expect to find at a major low or major high, just as you have one here. Really good one there, and one right there at the high, just before the high, which is sometimes the case. So now on the 10-minute chart, it's same thing. I mean, I've got all of these channels drawn across all the other minute charts, but this one, the tightest one, we've already broken above. So I am expecting to get up to the next one. Now I want to see the tick charts. And this was the upsloping area for that long, or at least one of them. So let me just delete all of that. So this is the low, sorry, this is the high before the low, and then this is the high just before the low that I'm trying to buy. So we're coming down like this. Of course, if I draw that one, we've already gone through that area. You do have the broken channel though, which throws over that a little bit. But when you draw it to that high, back to the lowest low between the two highs, you can see the last bar is touching that channel and the median line. And that's exactly what I'm looking for. And then of course you have the downsloping channel right there where I got in. So this would be the next channel, which is kind of why my stop was just slightly below that line in case it did come down and tick that channel line right there. But really, see, if I were to have drawn that one, it's pretty much useless. So that's why I had this one right here, which is every bit as valid as any other channel. I mean, that's especially what I look for, drawing from the low before the high or the high before the low. In this case, it's the high before the low to the nearest high, and I'm looking for the retracement down to get long, and that's where it ends right there perfectly. And then we get quite a few 2-bar patterns at that low, a lot of churn, which is, you know, very high volume per range, indicative of demand coming in at a low or supply coming in at a high, and stopping the movement, which it did perfectly. Trickled down a little bit further, but not too much, and then took off to the upside, and it never came back down below that price, although it came close here. I think it was a couple of ticks above that low. Yep. So see, if I would have tightened my stop up, say behind this low, I would have gotten taken out overnight. But no, I left my stop in place, left my targets in place, and then I've been waiting for it to get up there ever since. And this is really where I should have taken my first target off, but we'll see what happens here in a moment. This is where I started recording, actually, right here. And that's another beautiful low right there. Actually, let's see if it lines up. Yep. Perfect. Oh, that's just too good to be true, actually. Look at that. To the tick. So all of these signals on the row 2 chart that we have, let me show you. You'll see these volume and divergence confirmation signals. You'll see a lot of them, but they're only valid when they coincide with the areas in the market geometry, and you have to have 2 areas that come together, one on one chart and then one on another. So in order to get this signal, I would have to have another area on one of the other charts. So let's take a look at that and see if we can find where we would have another one. And it looks like that's going to be right here. Perfect. So yeah, we'll get that. So you see that right there? That's the market geometry. in the lower panel with the divergence analyst, coinciding with the signals from the volume and momentum divergence, together with the operative time frame signals, these signals here. See how it's given a short right here? Because that's a potential ABC correction, just as this was here with a little ABC. So these signals tell you when you have a potential corrective pattern, and then depending upon which chart that's showing up on, that's the operative time frame. And then you have your specific set of volume and momentum divergence signals that have to coincide with that operative time frame, corrective wave, corrective pattern, pullback, whatever you want to call it, to confirm the trade. And then you have to have that signal, the confirmation signal in the price panel, together with the signal from the market geometry template. And that's perfect. I mean, you've got these 2R patterns at this low on a few different charts, as you had here early in the morning, together with the signals in the market geometry. And when they both line up, then they appear on the row 1. And this is where I entered yesterday, right there. There's one this morning. Potential short here, although some of those areas are just kind of leftovers from the down sloping channels that I haven't cleaned up on some of the other charts. Then this is the good one that we were just looking for. It's picture perfect, really. And if you were trading this automatically with Blackbird, this would take off the first contract, the opposite signal. So for me, that's not a valid short because it's going up so fast. And I was looking for longs only until we get up to the first big downsloping channel, which is quite a bit higher, above 109. It takes a little while to get used to trading like this, but there's really very few other methods that can give you the kind of roadmap that a system like this can give you, which enables you to anticipate the next movements in the market with a much greater than 0.5 probability. And that's really what trading is all about, stacking probabilities in your favor and probabilities that you can actually test and get behind with a degree of certainty. And getting these monster winners like this is really how you grow your account. You would think that 80-20 rule would apply, that 80% of your earnings would come from about 20% of your trades, but I found that about 80% of my earnings came from roughly 10% of all my trades. And those, of course, were these monster winners like this. So nailing the direction, not looking for shorts when you should be looking for longs, not looking for longs when you should be looking for shorts, getting that right more often than not is one of the main things that helps me catch these really big, massive winning trades with very low risk. And that's really paramount. That's what's key to this whole trading thing, is really limiting your risk, maximizing your reward, knowing when to hold, when to exit. Still working on that one, but hey, we're all a work in progress. But at least I know for certain that I have a methodology that is a profitable one. I just know that it can be more profitable, and that's what I'm working on now. This is the system that I've arrived at and traded for years now, and I'm very, very confident that it's worthwhile and it is a profitable one, as opposed to everything else that I've seen and bought and tested and worked with for other people as well as myself. So anyway, I'll come back and record the last half of this when we start pushing a little bit higher. Okay, so it's Monday, June 27th. It's noon right now, 12 p.m. Central Time. So I finally just closed that long, and I did that at the top of this upsloping channel on the tick chart. And then I went ahead and got short. Maybe I lose on it, whatever. I've just booked a massive 500 tick trade. I don't think I recorded this part, but I added 2 or 1. Yeah, I just added 1. Excuse me. So I added that 1 manually. Bought 2 here. Added 1 here. Almost got stopped out of that third contract. and then closed it before the close of the session. Held through all of this. I almost got filled on one, and then here it opens up last night. So that's Friday just before the close. I took that one off. Actually booked a little bit of profit right there, barely. And then held the other two until right here, right now. So I took one off there. I had the limit setting there, and I had set that limit at a little bit above the price on Friday. That's why it was a bit low. Both of them should have come off at the top of that line though, really. And now I've just entered short two at the top of this downsloping channel. I think I'm early. The top of that downsloping channel on the hourly or the min 6. It's really this one. Now, the only thing that worries me a little bit is that it's going to throw over that downsloping channel into the upsloping channel. And I have a feeling it's going to do that. This is a really strong move. So I'm shorting it with not a ton of conviction. Like, those are really big, wide-ranging bars that look like they've just started a new move. But then occasionally you see that, like here. I think that was actually the report on Wednesday, though, so maybe that doesn't count. But yeah, that doesn't necessarily look like it's finished moving higher. So yeah, this would be a setup short on the hourly chart. We'll see how that goes. I just wanted to get this documented. All right. Okay, just a quick update just to show that it is moving in favor of the trade. I didn't use Blackbird. I didn't have it on. And I wanted to make sure that I got it. Man, these churn bars on the tick charts are just, like, look at all those 2-bar patterns. Like, look at that. Awesome, extreme churn, 2-bar pattern. Same thing at the high there. Same thing at the low. It's gorgeous. Look at that right there at that high. I'll tell you, the relative volume on the tick charts is like, it's unlike anything I've ever seen, really. It's the volume analyst. It's pretty awesome. Not so sure that this trade is actually going to work out. You know, obviously I hope it does, but time's at 1:30, just closed. I'm gonna take one off right there, and I'll leave the other one to run. Well, to run, I shouldn't say that. Leave the other one to potentially make the target that I'm expecting for the trade.